Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is August 9th, 2022, and Bitcoin and the rest of the cryptocurrency markets are at a decision point. I believe this is the moment of truth. This is either a make or break moment. I'm not trying to be dramatic. I'm gonna have fun with this live stream. We're going to have fun. I'm going to just do analysis. I love doing analysis. That's why I do it for a living. We're gonna analyze everything in Bitcoin's price action, and then we're gonna look at some some other things, some ancillary sort of measures, like we're going to look at traditional stocks, we're going to look at other assets in our watch list. We're just going to go, down the line from primary to secondary to tertiary to try to get an idea as to what will likely happen. But I do believe this is the moment of truth. It's make or break time for Bitcoin. I don't see, much more indecision happening. So guys, if that interests you, then you're in the right place. Let me check who's here. Okay, looks like we're all right, streaming properly. Definitely like the stream. Shout out, who you are, what you're about, what you like, in the chat. Let us get started. I first want to apologize that I am late, right? Typically the live stream's at 4:30. It's 6:30. I did say 5:30 this morning, but stuff came up, personal stuff. You guys know how that is. It's hard to really always plan perfectly. We're typically not this late, but such is life, and I guess this is one of the luxuries of working for yourself. Sometimes this happens and it's not a big deal. But I do want to be consistent for you all. And just to show up when I said I was going to show up. That's important to me. In any case, I hope you guys are having a great Tuesday. Let's get started. I'm on the hourly time frame, and not too much has changed since this morning. Where we had this drawdown of, we had a drawdown of about 3.5%, and 3.5%, maybe 4%, okay, 4% drawdown, and that doesn't seem like massive, but in the scheme of things, and given where we've been at, and that we've been consolidating for so long. I mean, we've been in this consolidation channel ever since the beginning of August, right? So just like 9 days straight, finally broke up and out of this channel, and now we're retesting it, it seems. So I don't hate it, I don't love it. It's just like, it does take a lot of patience to win at this trading thing, right? Anybody that's impatient, that wants to trade every little last move, is likely going to be a loser, right? It's not easy to predict exactly every single last move the market's going to make, and you don't need to. And successful traders don't rely on such low probability calls to win. They trade larger time frames, in my estimation, in my experience, right? Obviously, you can go in really small time frames and trade some signals, and maybe, but your hit rate's not that good. But if over time, if you're good enough, you win more than you lose, and that's the name of the game. But it's high stress, and I've done that before. I've made profits on the 5 minute, the 1 minute, and the 15 minute. It's high stress, and maybe it's not worth it. It's not worth it to me, right? Going to bed, waking up with checking my trades, all that stuff, like meh. So yeah, that's just my experience. That's my personal preference. Obviously, that's just me. I'm not speaking for anybody else. But just to recap quickly what we said this morning, I'm seeing 2 degrees of reversal consolidation here. Yeah. So we're going to do a lot of cool things today. I'm going to look at not just Bitcoin. I'm going to look at Ethereum. I'm going to look at the SPY, right? I'm going to look at traditional markets. And I'm going to try and see what the hell is going on. But here, I definitely see corrective waves, right? Remember, according to Elliott wave theory, corrective waves come in flavors of 3. Impulsive waves come in flavors of 5. All I see are corrections here, right? Retracements beyond the 618, right here. This is big A to me. If you're subscribed to the channel, you'll know what that means. This is big B. This to me is a 3-wave move, small a. This to me is a 3-wave move, small b. Question is, though, is small b complete? All right? And I didn't go into that kind of detail this morning, but we can do that right now. So what we're going to do is we're going to jump into the 15-minute time frame. All right? We're going to try and analyze small b and see if small b is likely finished. So how do we know something's finished? A trend's finished, according to Elliott wave theory. Every trend that, goes every trend is impulsive by definition and needs 5 waves, okay? So upon sort of initial examination, I see 5 waves here. I think that's kind of undeniable. I see 5 waves there, okay? So 5 waves in whatever that is. So if I come before, I count this as 1, count this as 2, count this as 3, because I see 5 waves here. I count this as 4, I count that as 5. I see that trend as being finished, okay? So you see how I did that? You don't want to overthink these things. Obviously you can measure, but I've looked at waves so often. For me, I don't even have to measure this. I'm just going to hide this for a second. So for me, I first, my eye zooms in and dials into that 3rd wave, because the 3rd wave is typically the longest and the most impulsive wave. And to me, that is clear right here, okay? But for me, just looking at this, if I have to count this, I'd count this as the 3rd wave in a 5 wave, in the 5th wave of this move, okay? I'm seeing this as A, B, and then I'm seeing this as kind of an ending diagonal right here. So my 3rd wave down here, my 4th wave here, and then here it's my 5 waves. I have an extended 5th wave for this ending diagonal. So this makes sense to me. Okay, why is this a legal Elliott wave count? Remember the rules. There's only a few rules in Elliott wave to count waves. What are they? There are 3. The first is wave 3 cannot be the longest wave. It doesn't have to be the longest, it can't be the shortest wave. It doesn't have to be the longest, but it can never be the shortest. Wave 3 is longer than wave 1, okay? Ever so slightly, all right? So that's okay. Secondly, wave 4 can't go into the region of wave 2. So here already you get tripped up, because in diagonals, wave 4 actually does encroach into the region of wave 2. So, you can kind of put that aside. I wouldn't say that that's a hard and fast rule, just because, yeah, diagonals breaks that. But that's the one kind of diagonals and triangles. You have certain cases where wave 2 and wave 4 encroach upon one another. Wave 4 encroaches upon wave 2 because wave 4 comes after wave 2, obviously. And the last one is that wave 2 cannot go beyond the origination of wave 1. Okay, and here you have that. Fine. And typically your wave 2 comes to the 618 Fibonacci retracement or thereabouts of wave 1. But again, in diagonals, leading and ending diagonals, you can see that. In triangles as well, you can see wave 2 kind of go beyond the 618. So I think the main rule in Elliott waves, if you're not dealing with the leading diagonal, ending diagonal, there are 2. You don't want wave 2. You can never have wave 2 go beyond the origination point of wave 1, and wave 3, even in a triangle, even in a diagonal, can never be the shortest wave. Doesn't have to be the longest, but never be the shortest. Here, wave 5 is the shortest. So this is my count, and it's legal as per the rules we've just, we've just stated, okay? And the other reason I like this is if I take my Fibonacci extension tool from wave 1, okay, retracement of wave 2, I see that my minimum has been met. The minimum extension of, it just works, this works out mathematically. I'm not going to derive it with you here because it's kind of boring. But the minimum extension of any extension of any sort of impulse, if you take the Fibonacci extension of wave 1, retracement of wave 2 is 2, 2, 3, 6. Here we've met that and some. So okay, so that's my extension right here. So my B wave pretty much goes, now let's make that, let's unhide it. Here it is, right? Yeah. Okay, so my B wave pretty much does this. Oops, that's not it. My B wave is here. Oh, fuck. Okay, here we go. This is A, this is B, this is my extension. Does that make sense? So the reason we count waves is to identify the ends of trends. And if you count 5 waves, you should have the end of a trend. Now, sometimes you don't, but that's because you didn't count the waves correctly. And that happens sometimes because you're not always going to hit the mark 100% of the time. But from what I'm seeing in this move right here, that trend is completed. And okay, let's now corroborate all this because I love Elliott wave theory. If you can't tell, you can corroborate. So I just did the work in working exclusively with price action. You can see my chart. It's clean as hell. I don't have any indicators on. Now we're going to play with indicators and use indicators to corroborate our read or sort of, disprove it. Doesn't matter. We just want to be, we want to be correct, even if we're disproven. That doesn't make sense. We want to make money. We want to win our trades. We want to be safe. We want to practice good risk management, even if that means we're wrong initially, right? That's what I meant, okay? So based off of my read, I have 5 waves here, and volume is saying, yes, Dean, it's likely. Why? You have a capitulative volume candle. And for those of you who don't know, if you look at the volume profile of any move, the end of the move will typically show a spike in volume. If it's a sell, then a spike in sells. Basically the selling is exhausted, so all of the sellers came out and finished selling in that last move, and then the buyers take over. So that's what volume showing you. Volume showing me that this is the end of the trend, and you can see from the beginning, volume kind of comes up and it peaks here, and then we start getting a consolidation reversal, volume trails off. Okay, so that's what I'm seeing. And so by definition, at this point, it's all consolidation reversal. So this is, the tricky stuff. It can be tricky. It doesn't have to be tricky. Once again, on a smaller time frame, we're looking for 2 degrees of A-B basing. Okay, so A wave, B wave, A wave, B wave. So big A, big B, small b. Then we can get our reversal. Question is this an A wave? Right? Remember, what do the A waves do? They typically target wave 4 of the previous trend. This is, as we count wave 4 of the previous trend, this is where our A wave came to. It's likely to be wave A. Okay? But if it's not, that means this was wave A and the wave 4 was the wave 4 in this last leg. I mentioned this morning. These consolidation reversal patterns, not very many people talk about them. I'm one of the few that talk about consolidation reversal patterns, A/B basing, in the sort of the system of Elliott wave theory. And one of the trickiest parts for me is getting the... I had trouble articulating it this morning. Getting the notional size or the timing, right? So like this in of itself is an A wave, but also it's comprised of an A wave, a B wave, another A wave, and another B wave. So if you look on a smaller time frame, you can see 2 degrees of AB basing here, but on a larger time frame, like on the, you can see just one A wave. Do you see what I mean? So which one is correct? Technically both, so it's hard to say, okay, I know for sure. But in our experience, wave A targets wave 4 of the previous trend. That's how you know that's wave A, so you can at least count wave A. But then wave 4 of the previous trend could be this wave 4 or that wave 4. So we still don't know. So even though you know, there's always a lot of room for not knowing. And I think part of what makes a good trader and chartist is that space of, I know, but I don't know. And so I'm still cautious. Yeah? Let's see. Any questions, comments, whatever? I'm going to go into the chat real quick. I know this stuff is highly technical. It's not for everybody. A lot of people, they jump on these crypto sort of live streams and analyses, and they just want to know if the price is going up or down. And I do this for a living. I could do actual academic study in this. So I know I get kind of wonky about it, and I'm very passionate about it, and it's not for everybody, at least to this extent, right? But please sort of bear with me. I'm going to get to what I think the market's going to do. So, all right, now that we've got that, so basically I think it is time. Now let's zoom out for a second and see where we're at. Just like I said this morning, you have a really nice 5 waves here and a 3 waves down, followed by some AB basing. Just some consolidation. You're looking good for continuation. I think it's very likely that you continue, but it's not very clear as to when you do. Okay, so that's pretty much where we're at. So that's our read on Bitcoin. Now let's pull out some more indicators. So we have our volume indicator. We saw that. Let's get that out of the way. Let's turn on the EMAs. All right, and we're going to use 4 EMAs here. All Fibonacci numbers. And they're all EMAs that, are quite useful. So during this entire consolidation, right, what we're saying is AB basing. We've pretty much been testing and retesting these EMAs on the 4-hourly time frame, right? The 21, the 55, which is the blue, the pink is the 89, and the green is the 144. We tested the 144 once, and it looks like we didn't test the 144 again. It looks like we just retested the 89. Do you see? But we broke all of these EMAs in this uptrend, right? In these 5 waves that I showed you right here. And we got and played on the 21, which is a crucial EMA for bullish momentum, right? If you're bullish, you're above the 21 EMA, right? That is kind of like a thing. Some people use the 20 moving average, but I use the 21 exponential moving average. And so basically what you're doing here essentially during this consolidation is all of these EMAs that you broke on this uptrend, you're coming back and testing them one by one. That's another way to read this consolidation. So I just want to point out, like, indicators are great, but in corroboration of your price action reads. If you just use indicators, it's confusing. But do you see? So just using indicators in that way and seeing what price did, it's very encouraging for continuation to the upside, because you can't just break EMAs without retesting them, and I don't think you'd previously done so. You're continually breaking and retesting, breaking and retesting, breaking and retesting, which is a healthy uptrend, right? Healthy uptrends are ones that retest crucial resistance as support, right? If it's fast, it won't last. If it's slow, let it grow. And that's essentially what we've been doing. We've been matriculating to the upside ever so slowly in this uptrend. Now, let's turn off the EMAs. Actually, let's go on the daily time frame and check to see what the EMAs did on the daily time frame. Let's see. Okay, it looks like we rode the 21 exponential moving average, broke up past the 55, came back and tested the 21 once again. And we're basically testing the 21 again here. So this dump today, right, we had a pretty red day thus far, has essentially just tested the 21 exponential moving average on the daily and bounced off of it, which is an extremely bullish sign, all right? It's that much more bullish given our low time frame reads on this impulse to the downside. And remember, let's go back on the 15-minute time frame. Guys, and don't forget to like the stream if you're getting value. Only if you're getting value. If this is complete gobbledygook or you're not getting any value, then I don't care. You can dislike it if you want. I think it's that much more powerful given that we did, if you missed this, just rewind to the beginning of the stream. But we counted 5 waves here, okay? And actually in this whole thing, we have an impulse wave with an extended wave 5, which is basically an ending diagonal with an extended wave 5. We have 5 waves. So the fact that we have 5 waves, and on the daily time frame, let's go back to the daily time frame, you're essentially testing the ever so important 21 exponential moving average and bouncing off of it. That means you're still bullish, right? Just going by these EMAs, these indicators. Remember that 21 exponential moving average. I'm not the only one to say so. It's pretty much universally used as a momentum indicator, a bullish momentum indicator. If you're under it, you're typically bearish. If you're bouncing off of it and you're retesting it, you're typically bullish, okay? So that was the EMAs. Now, let's have a look at what our Stochastic Rsi is saying, okay? I love using indicators this way, corroboratively and one by one, just, going down and really gaining clues as to what's going on. Daily time frame's a bit much, but let's just look at this on the daily time frame. What the daily time frame is showing us in the Stochastic Rsi is that we're bullish and we're staying bullish, okay? So if you can see here, we're pretty much overbought once we get over 50, right? And momentum is basically saying you're overbought, and you've been overbought ever since about early July, maybe July 5th. And you're bouncing off that line of overbought price action. But you're not creating bearish divergence, right? Because you're essentially consolidating upwards. So that's quite bullish, right? If you go on the weekly time frame, I've shown this before on the channel, just a larger time frame, you can see that all of that consolidation in overbought territory essentially is just a clear uptrend, right? Where your K is crossed over your D, right? You're bullishly crossed, and you've been bullishly crossed since the end of June, and you're matriculating upwards, right? You're not even topped out on the momentum indicator on the weekly time frame. That's extremely bullish. Okay, so that's what my momentum indicators are showing on the daily and the weekly. I think those are the most relevant time frames to look at, that momentum indicator. Okay, so that's basically what we see for Bitcoin. It looks like, we're going to get continuation to the upside, right? It is it's true that if you go on the 4-hourly time frame, you see a bullish cross getting ready to take place on the 4-hourly time frame. That is very bullish, especially since Yo, you've rejected from this resistance band 3 times, okay? And I know I've said third time's a charm, but actually in technical analysis, for some reason, 4th time is a charm, typically, right? You can look this up. 1, 2, 3. This would be the 4th time. So, and that 4th time would coincide with the bullish cross on the 4-hourly time frame. Okay, last time we got a bullish cross was down here, okay? And the time before that was down here. So we're going to get another try. It looks like we're going to have another go at this resistance. And so, when I say, this is pretty much, what's the title of this? Moment of truth. Thank you. This is a moment of truth. You know, there's just so many times we can reject off of this resistance and not completely nuke, right? At some point, we're going to have to break it, and it seems that the time is near, okay? Another reason why I think the time is near is in our lunar cycles, all right? So let's turn off the Stochastic Rsi, just clean up our chart, go back on the daily time frame, and actually let's get rid of this. I think we've made the point here with the consolidation reversal, the AB bases, okay? Let's just clean the chart up. And let's turn on our moon phases indicator. And what can we see? All right, first of all, for those of you who are not subscribed, because I'm not going to assume everybody follows this work, so moon phases work like this, quite simply. On a full moon, there's enough evidence gathered throughout many markets, crypto, traditional markets, throughout history. There are many, there's like, you know, actual academic papers, and there's research, like serious research to show to a statistically significant degree that on full moons, between 0 and 3 days after a full moon, you tend to experience a pump, okay? So right here, the 13th of July, we experienced a pump. Whoops. 13th of July, we experienced a pump. Here was the 15th of June. We didn't necessarily experience a huge pump. All right, we did go up, but then we proceeded to go down. It's not perfect, but after we went down for a couple days, right? Remember, so 1, 2, 3. The 4th day, we experienced an uptrend. Do you see what I mean? 0 to 3 days. That's what the studies show, and there's a higher likelihood on the 3rd day after the full moon, right? And the 3rd day after the new moon. But here, just like the day of the full moon, you got the pump. Here, the new moon, you tend to experience a market high. So here, market high was just a few days before the new moon, but you had the new moon and the market sort of the market had a downtrend. Here you experienced a new moon on the 28th. You had some sort of downtrend. So the next important moon phase is the full moon, and that's coming up on August 11th, okay? So I do expect for a big move between the 11th and the 14th. Now, what's interesting about full moons is that they usually occur at a market nadir, right? At a market low. So here you see the full moon, market low. Full moon, market low. Obviously, I can zoom out and show you this I can show you more data, but this has already been established. I didn't make this up. I didn't figure this out. This is something that many people trade and many people watch, okay? Here, again, full moon, market nadir. Full moon, market nadir. Market bottoms on the full moon. Typically, 0 to 3 days around the full moon, you get that market bottom. So, in similar fashion, I do expect, we're the 9th, right? So, 10th, 11th, that would be the full moon. I do expect some move and then some sort of move down between the 11th and the 14th that would represent that new moon or that full moon nadir. Do you see what I mean? So I wouldn't be surprised if between like now and the 11th, we got a move to the upside, then a retracement, right, between the 11th and the 14th. That represents the full moon nadir before continuation. So that's what I'm looking for. I've been expecting that, for better or worse, not because it has to happen. It's not 100%. Again, this is just an indicator. It's not perfect, but it's highly, it's more often than not the case that this happens, right? You get full moon nadirs, you get a new moon zeniths. A zenith is the top of the market. And so again, not 100%, but you're playing probabilities. So probabilistically, we should expect the market to find a bottom around the full moon. And given that this immediate trend seems to be exhausted, at least in this kind of low time frame, I do expect a move up before another move down, right? And not that this is the start of a larger move down, and then we could just keep going down until the 11th to 14th, and then we continue to go up. Do you see what I mean? So I'm pulling out all the stops, guys. Like, I got the lunar cycles, I used EMAs, Stochastic Rsi, momentum indicator, right? Volume, use everything. Indicators are great, but use price action as your backbone. If you don't know how to read price action, you're kind of lost, because these indicators will lead you astray. You need a foundation in your analysis to formulate your base thesis. Okay, so at this point, what we want to do is we want to look at other assets in the market to see, hey JY, what's up? Yeah, I do think a big move is coming, and it's overdue. Obviously, the market's never overdue. It's always on time. But we've been waiting patiently and impatiently for a move, and I think we're overdue for a move. So let's look at Ethereum, and in Ethereum you have something similar, to be honest. In Ethereum, I also have our impulse starting on the 13th of July. So I get 5 waves up, 3 waves down, 5 waves up, 3 waves down. Again, these are different degrees. I've already counted this out, but just really quickly, just so you guys understand, if this is 5 waves up and this is 3 waves down, I'm seeing this as the beginnings of wave 3, not like the whole of wave 3, because obviously, according to Elliott wave theory, wave 3 can never be the shortest wave. We don't have wave 5, so even if this were wave 3, wave 5 could be shorter than that, and that would be it. But it's likely that wave 3 is going to be extended much beyond this, and that you're basically going to go much higher. So yeah, that's what I'm seeing with Ethereum. It's not that much different from Bitcoin, to be honest. It's just that wave 1 is a little more extended. And you are getting this intermediate wave 1, intermediate wave 2, and then some consolidation before going into intermediate wave 3. So that's what I'm seeing with Ethereum. I'm not seeing anything different, and this is looking really bullish to me, to be honest. I mean, just look at it on the daily time frame. Would you short this? Would you short this? Let's turn on our EMAs real quick. Like, look at that. Just keep it stupid simple. People like to overcomplicate things. And this is where sometimes people who oversimplify, who don't know anything about price action, and just look at one indicator that's kind of reliable. Obviously, it's not always going to hit, but by and large, if it's their rule, they'll be successful in trading because they'll win more than they lose. Just being consistent. If you're consistent in using this 21 exponential moving average on a high time frame and just watching price and how it acts with this 21 exponential moving average, if it's above it, then that trend is going to continue. I mean, this is really, really good. You broke this 21 exponential moving average in this uptrend starting on the 13th. leading into the 15th, and then you retested it in that wave 2 3-wave retracement, and then you basically continued, you bounced off it in that intermediate wave 2, and you're just going. You just expect more upside. I mean, just keeping it simple, looking straight up at just that, you'd be crazy to short this. And a lot of people are shorting Ethereum because they're trying to be smarter than the average bear, saying, the triple halving is coming, and this is coming, and that, and this. Just look at the chart. The chart is yelling, buy, buy, buy. And you're not just buying some little thing. You're buying an epic reversal pattern where you're making a rounded bottom. I mean, I don't know. It seems clear as day to me. This is a clear reversal pattern that happened right here. And this is just matriculating up to the first important resistance. And that's why we've had so much consolidative price action. But essentially, we've been moving up. It's just we've been moving up very slowly and deliberately, because there's resistance, and you're just coming out of, you just changed trends some days ago from extreme bearish trend into a new bullish trend. So your initial impulse is going to be staccato. It's going to be, stilted. But this is an uptrend to me, just looking at Ethereum, And I think I really like looking laterally. I call it looking laterally. Just looking at other assets in the market and trying to glean what's likely going on. Just looking at Ethereum, I'm even more bullish. I think Ethereum's even more bullish than Bitcoin. And, this market moves in tandem. You seldom ever have assets moving completely independently, just doing their own thing. If Ethereum's, I believe that Bitcoin's bullish. Ethereum looks really freaking bullish, right? People who thought they were really smart sold at 1,700. Garrett Soloway and all of his people sold at 1,700. I don't think that's a bad trade, right? Because, you don't have to sell the top, right? Selling whenever, close to the top is good enough, and just managing your risk and following your rules. So much respect to them. No shade whatsoever on my part. But, if you have no context in your charting and you're trading the smaller time frames, you got out of a perfectly good trade. Maybe your entry was down here and you sold and you're trying to get back in, but then now you're not playing with fire, but it's just, you're introducing more risk when you just keep it. Just hold it. There's nothing to do. Sit on your ass. Hold it. Don't do anything. Your entry was elite. Just hold it. I think it's clear. Anyway, just going down the list, I think you can see extreme bullishness, right? You have your large reversal pattern, and then you start with your consolidation and your uptrend. I mean, that's it. I wouldn't overcomplicate things, right? If you zoom out, look at it on the higher time frame. Looks to me like this may be some sort of 3-wave move, kind of like in Bitcoin. You have this 5 waves up, you retraced, and here you're basically doing a pivot, right? You're doing exactly what we saw on the lower time frames, an AB base, and then your next move is up. It's I love doing analysis on these live streams and in this using the daily Bitcoin update, because sometimes I'll have ideas and I'll formulate them by myself, but then when I do it on these forums, some things become more clear. The bullish case is so freaking clear to me right now in this moment when I'm looking at it. Just, I'm in the flow, I'm looking at it. I would never sell anything. All of my positions, by the way, I entered around here, they're all in profit. And it seems like day after day, you go through this and you go through up and down again. And you're like, oh my God, what am I? But then I look at my positions and I'm like, oh shit, I'm up 100 and something % in some assets. It's like, wow, okay, like, I guess I'm doing well. It's just I'm getting impatient, and that's just my human nature kicking in, wanting to do something. But like, the best thing to do is just not do anything and just wait. And to be honest, because I do it for a living, I have to sell some positions to pay mortgage, to pay my bills and stuff like that. But I'm not selling for months if I can help it. Like, a lot of those positions that I got in, I'm not touching for months. And you know, if you're subscribed to the channel, you know my high time frame reads. I have a Bitcoin top projected around February 19th of 2023. Okay, again, that's just a projection. I'm not a Nostradamus or anything like that. That's just what the chart showed me, and I explained it in the live stream that I did using Fibonacci time extensions, and I did channel analysis, and everything pointed to that one date, February 19th, 2023. And that also happens to be some sort of halving, or I don't know, something. I forget. I don't remember, but that date came out. And so I'm not selling my positions till, you know, Q1 of next year. But obviously I'm going to sell some just to live. What do I want to do now? Let's answer some questions. All right, JY says, Bears will be crying. Love it. This channel also does Elliott wave theory. Kill it at crypto. He thinks we move down one more time and then go on a crazy fifth wave. All right, cool. Probably check that out. Can you check it out and give your thoughts sometime? Yep. Kill it at crypto. I'm gonna check it. Greg, love it. Kill it at crypto. ETH will be more bullish because of the merge and will push the market higher instead of BTC this bull run. Perhaps. I think we're in an alt season though, and I've said this before. I do think it's alt season time. I think you can tell by just having a look at Bitcoin dominance, and we looked at this, you know, a long time ago. We're just gonna have another look. I haven't touched the chart. This chart has been up for months. And yeah, looks like this is gonna be major right here. The break of this support is gonna be major. That's gonna be when assets start running and breaking major resistance, I think. But yeah, Bitcoin dominance is just going down to levels we've never seen it before. So yeah, I don't think it's just going to be Ethereum that's going to shine. It's going to be all altcoins that are going to shine against Bitcoin and really pull off, you know, an alt season for the ages. Okay, now as promised, let's have a look at the traditional markets, because you know, there's correlation there. All right, let's see. Okay, well, you know, a lot of people are saying traditional markets are going to puke, and they're at resistance, which they are, but kind of like Bitcoin, I think this resistance is going to be broken, okay? And so I've got kind of an estimate for what I think is going to happen. I don't know. You know, obviously a flat correction can look a number of ways, but I just estimated, you know, a B wave coming up here to about these areas. But yeah, I do think that if you read this, and I have read this on the smaller time frames, I'm not going to do it again, but I see clear an ABC, a three wave move here. And so I let's turn on volume indicator. Okay, so I think this was the capitulation right here. This was the capitulation right there. Do you see? This was the end of that trend right there. Okay, and so from there you got your reversal pattern, your A wave, your B wave, your A, B, so that your 2 degrees of consolidation, reversal, A, B basing. Now you go into your B waves. So your B wave is going to look like B waves look like, right? 1, 2, 3. B waves can look a number of waves, right? B waves are notoriously challenging. But that being said, on the smaller time frames, let's go on the daily, you know you're going to get 5 waves, right? At least in the beginning. So we counted our reversal right here. where was our stochastic or our orthodox low? It was, let's gain our bearings. Oh, here it was, right here, right? So here we see 1, 2, 3, 4, 5. Okay, so it's right there. Okay, so we start counting from here. So we got big A, big B. Okay, that's your first degree. Small a, small b, that's your second degree. So here we can start counting 5 waves. So that's what we're gonna do. Okay, so that's why we start counting here, guys. If you're getting value, please like, share, and subscribe. I don't see a lot of people talking about these kinds of things and showing you why they start counting from this place or that place. Like, you know, there's a method to all of this, and without understanding A/B basing, where do you even know to start your Elliott wave count, your impulsive count, right? Let's go into even smaller time frames. Let's go on the 4-hourly time frame, see a little more detail. And let's, okay, so here I see this. Here's what I see. I see this is wave 1. This is wave 2, a sharp retracement, right? Down between the 382 and the 618 of wave 1. Wave 3, let's see. What we're gonna do is this. Okay, we have wave 1 and wave 2. Let's project wave 3 using Fibonacci extension. Okay, we're gonna look at the typical wave 3 between 1618 and 2. Okay, that's what we're seeing here. See that? So this is how you can use Fibonacci to help your wave count. This is just probabilistic, okay? So wave 2 come here. It's likely that this is wave 1, wave 2. So wave 1 of 3, wave 2 of 3, wave 3 of 3, wave 4 of 3. You want another wave for, so we're counting, based on our count, you can expect one more wave up to complete wave 3, okay? And actually, so I mean, look, guys, you can't make this shit up. We're expecting one more wave to complete wave 3. That would take us just, I mean, if you want to channel this, let's channel it. Guys, if you're getting value, please like, share, and subscribe. I don't see anybody going into this level of detail with Elliott waves. I don't see it. I fucking love this stuff. All right, let's get our channel out. And I love doing this with you because, honestly, I'm too lazy to do this on my own. If it wasn't for the fact that I had to do this for the live stream, and, you know, I do a weekly live stream, I'm not doing all of this stuff, you know. Maybe I'm having a look at it, but I'm not going to be as... I'm not going to be as, you know, careful and, you know, pulling out all these tools and doing it all nice and stuff like that. So thank you all. You do a lot for me. You really do. So let's see. Let's see. Can we channel this nicely? Yeah. Let's see. I don't know. Maybe not. Okay. I'm over the channel. All I know is I'm excited that, here, let's count this. Let's count this. Wave 1 of 3, wave 2 of 3. So this is the intermediate count. Wave 3. I think you came up here. Right? And then you've basically been in a wave 4. So this WXY perhaps, or a flat correction essentially, right, of wave 4. I think you're finally getting out of it, and you can actually measure it. Okay, how we're gonna measure? We're gonna measure wave 4 or wave 5, right? We're gonna measure wave 5. What we're gonna do is, there's 2 ways to measure wave 5. One is by taking the inverse Fibonacci retracement of wave 4 and projecting the 1618 between the 1236 and the 1618. Or I think the better, more elegant projection in this case is to use wave 3. Okay? Use wave 3 and the retracement of wave 4 for wave 5. So we're going to use wave 3 of this intermediate wave 3, which starts here. Okay, and it goes all the way up here, I want to say. Or is it here? Maybe here. Okay, and then retracement of wave 4, and then project that to the 618. That typically gives you wave 5. So maybe wave 3 ends up here. Okay? And then you quickly go down for a few days, I'm guessing, till the 14th, which would coincide with our full moon nadir, right? We're expecting a move up and then down, coinciding with the full moon. And that would be the end of your wave 4. I think you're already in your wave 4. You just got to go up and come back down. Sorry, you're not in your wave 4, but you're in... What am I trying to say? You're in wave 3. And so you're trying to end wave 3. And basically you're going to top out at your previous top somewhere around here. Okay? So the traditional markets are saying the same thing. We're seeing an uptrend on the horizon. We're seeing in the traditional markets a move, a small move to be honest, a 2 to 3% move to the upside, followed by a retracement, and then a big move to the upside. Okay, but I think that in crypto you're going to get a bigger move. I don't know. Right, so that was the SPY. Now let's have a quick look at the watch list, the larger general watch list. See what's going on there. All right, the biggest movers, Define, that's been at double digits, so no real changes since really this morning. 3% for PYR. Ooh, breakout here. This is a breakout. This, my friends, is a breakout, right? How do I know it's a breakout? It's very likely because, once again, you have this move followed by this consolidation reversal and capitulation, right? Kind of like what you see in the other assets in Bitcoin and Ethereum. Right? I know a lot of people that do Elliott wave are probably counting this as a complex correction, and this is the last capitulative sort of that's the last impulsive move of the correction, the flat correction. But I don't see it like that. I really do think that this was your move, and then everything you have here is AB basing. Right? And so this was your last move right here. This is why I think, this is the moment of truth. I think we're going to get this in the market, right? I think this is going to pump for the next 24 to 48 hours before we retrace into our full moon nadir. Link, not yet there, but I'm expecting breakouts, right? We got volume coming in with this, which is important. Let's go on the hourly time frame, right? I'm not in PYR. Don't really, I know it's Vulcan Forge, it's some gaming thing, but look at the volume here. This is a legitimate breakout. Right? Link, you're gonna get breakouts, perhaps. BAT, BNB. BNB is always interesting. It has such it's the cleanest price action I've ever seen. Everything it does is like, it's like if you had to give examples of price action in a book, it would look like this. Like it's not messy at all. It's very clean. I always think if I'm confused and I'm not sure what price action is doing, I just look at BNB and I'm like, oh, okay. So yeah, that's pretty much it. I think it's quite clear we're in an uptrend, and the uptrend is going to continue, and it's likely to continue after we do our small time frame reversal here. You know, the traditional markets are saying that. Traditional markets are showing that. They're not menacing a big dump or anything like that. As far as I'm reading them, moon phases are showing what I said. You know, my EMAs doing really well. My momentum indicators, they're all bottomed out, right? So, you know, let's just go back to PYR that just broke out and just prove it to yourself. Turn on your momentum indicator on the 4-hourly time frame, completely bottomed out right here on the 4-hourly time frame, cross bullish, right? If you go on your hourly time frame, probably bottomed out. Oh no, you're up there, but you can stay overbought. Your daily time frame, yeah, you have some runway. And look at that. That's a nice rebound right here, showing strong buy pressure. That's nice. This is very nice. It's very nice. I would not be surprised if, you know, we got the same thing in Bitcoin, Ethereum, and other assets, right? So yeah, let's answer some more questions. ETH will lead alt season. JY says, it's typically BTC the market mover. ETH will lead alt season with all the alts. BNB a strong crypto. Yup, BNB is very strong. So yeah, do you guys have any assets you want to look at? That's pretty much my analysis. I literally went over all of my indicators, from moon indicators to my stochastic RSI to my EMAs to my volume indicator. Like, I held nothing back, and I learned a lot. I learned a lot from these guys. I don't script all of this stuff. Obviously, I look at the chart incessantly because, you know, this is what I do for a living. But I'm not always like, I'm going to talk about this and I saw this and I'm going to talk about that. Like, a lot of times I just look for the very first time and see things with fresh eyes during these analyses. So it's exciting to me and I learn a lot. Let's look at reserve rights. Ooh, that a breakout? Looks like it, no? Let's see. But yeah, imagine fading this and being like, oh, it's gonna crash. Like, it's been going up pretty much since July 13th. You know, obviously it retraced quite a bit, but it's been going up in this asset, you know, quite unmistakably since July 26th. And it's now at crucial resistance. It's, I mean, this is nice. This is very nice. This is one of mine. Look at that. Look at that. Ooh. The 21 and the 80. Look. These, the 21 EMA on the daily is about to cross over on the 55. That's bullish as hell, right? And you're pretty much on the daily time frame. You've surpassed the 21, the 55, and the 89. You retested the 89, right? Yesterday, you basically went through, you broke the 89, you retested it, now you're pumping, you're targeting the 144. That's cool. That's awesome. I think, yeah, you probably get that resistance here in this asset right here. And let's just look at that real quick. If you were to go like this, ooh, look at that. God, you can't make this shit up. I love it. I love it. I love it. I love it. The consistency. Okay. Do you see how this 1618 and this 2 Fibonacci extension are exactly where your green 144 EMA falls? Okay? And if you were to take, guys, if you're not catching on, what I'm trying to say is this. This is wave 1. This is wave 2. Wave 3 ends right here. Wave 4 then starts. Expect wave 4 to take, you know, a few days, right? Maybe the time it takes for maybe the time it takes for, the full moon nadir to happen, right? 3-4 days, something like that. And then wave 5 then takes you to Valhalla. But that is, the Fibonacci's say it, the EMAs say it, the full moon, the moon cycles say it. Like, that is a high likely projection for what will happen in this asset in that way. And look at this. You go up here, you complete wave 3, so you make a penny, right? So basically you pump from here for the next couple days, you pump maybe 20%, right? And then you retest this resistance with wave 4. Do you see how that works? You're clearly, if you guys can't see what I'm talking about, you're going to be breaking this important resistance right here. So you're going to break it and you're going to retest it before continuation. That is just like fucking picture perfect. You gotta love it. You got to love it. Or not. It's up to you. That's a high probability read. No crystal ball, but that's as far as you can say, like, that's a very likely move. Like, that progression, right? For RSR. So yeah, RSR breakout. I think that's a breakout, legitimate breakout. You go on the hourly time frame. What you want to see, bullish cross. You're completely oversold. And if you turn on the volume, you should see, if it's a breakout, you should see the volume come in. Okay, the volume has not yet come in. So we do want to wait for the volume to confirm it. But if this is indeed a breakout, once volume passes this area right here, you should see it come in. Okay. So, yeah. Will we see the same thing in Bitcoin? I don't know, maybe. I hope. I'm expecting something like that. Dodo. Cardano. Yeah, that's pretty much it. Guys, if you got value, please like, share, and subscribe. It's been a pleasure. Have a great rest of your Tuesday, and I'll see you guys tomorrow. Take care.